gold today is unloved and undervalued. Virtually no Western central bank bought gold. What we saw in 2006 to 9 was just a rehearsal.
Please join us for our next live stream, Sunday, January 26th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, January 26th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, if you are new to this channel or you have not already done so, please do subscribe. Click on the bell to be notified on new updates and do give us a thumbs up. If you like what we do, we really do appreciate your support. Our guest today is Egon von Greyerz, founder of Matterhorn Asset Management Company, a Swiss-based private investment company with a focus on wealth preservation. No stranger to the international gold community, Egon is a firm believer that gold is the ultimate form of wealth preservation. And we're delighted to have Egon here with us today. Good day, Egon, and welcome to SBTV. How are you doing?
Patrick, very good to speak to you. I've followed your work for quite a while, and you're doing some very good interviews. So nice to speak to you for the first time.
Thank you, Egon. Really do appreciate that. And likewise, we followed you for quite a while as well, and we appreciate the work that you do. So I'll just get into the first question, if you don't mind, if you could share with us a little about your background and how you got into the gold industry.
Yes, well, I have a long business life behind me, and an interesting one. I've started as a banker in Switzerland, and then I went to the UK. I was offered a job with a UK retailer that seemed an emerging company at the time. It was quite small in cameras, hi-fi, electronics, etc. And I joined that in the early 70s, and then we built it up to the biggest consumer electronic retailer in the UK and a FTSE 100 company. So I did that for 17 years, and then I started my own investment activities, which was early 90s, and late 90s, I started worrying about the world and the risks in the world, and started looking at gold. And then 2002, we entered the gold market in a bigger way for ourselves and for a few investors that we advised, people we had done business with, etc. So that was 2002, and the gold was $300 we went in at. And so we set up the system of storing outside the banking system, direct ownership by the investor, etc., for insurance and wealth protection purposes. And not until 2005 did we open it up for outside investors, because there was demand from a lot of people. So then we became a regulated company in Switzerland. So we're based in Zurich. And that's what we're doing now for clients around the world in around 60 countries. And we deal mainly with high net worth or ultra high net worth individuals. We have vaults. We have vaults. We also use vaults in Singapore, but we have the biggest private gold vault in the world in the Swiss Alps, and probably the safest vault in the world also, which is obviously an old military bunker. So this is, nuclear bomb proof, earthquake proof, gas attack proof, and a high level of security. It's a passion for us to help people to preserve wealth. We're not knocking on doors. We're not trying to convince people, because either people want to preserve wealth or they don't. 99.5 or more of the world doesn't understand gold, doesn't hold gold, doesn't want to invest in gold. So we, like you, we are mainly preaching to the converted, but that crowd is growing. We can see that, so I'm sure we will. And I always say, we have a good business now, a good sized business, but I think we only started, because the times that you and I have been talking about with other people, they're just starting now. So that will make our work very important for the people who want our help.
Yeah, you've done a lot of impressive, colorful things there, Egon. What is gold to you, and how important is it today?
Well, gold to me is life insurance, if you want. I mean, it's absolutely it's so essential to save yourself from what I think might be a financial system that won't survive in its present form. And if it survives, it will be with fiat currencies or paper currencies that will be virtually worthless, because the central banks around the world will have to print so much money, and they've started that, of course, already. You know, I called August 2019, compared that to August 1971, when Nixon took away the gold backing of the dollar. I think the noises that central banks started to make in August 2019, that they're all from starting with Draghi, they said we will do anything it takes to save the system. And then, of course, the Americans came in and they started their repos, their money printing, and that's going on. I think there is trouble in the system. So gold, to me, as I said, is really insurance, wealth protection, and I feel sorry for the people who don't understand that, because I think there'll be a massive wealth destruction in the next few years. I'm not a pessimist. I'm not negative about the world. It's just that I think I see this just as pure insurance. What I've done my whole business life, whether it was in corporate life or now in the investment life, is to evaluate risk. And I was, if you understand the downside, if you understand what can happen and protect against that, the upside will take care of itself. But most people think that all trees will grow to heaven, and because they have done in the last 100 years, more or less, this enormous money printing and credit creation that we've seen for 100 years, and accelerating since the 70s, when the gold backing was taken off the dollar, and all other currencies also. And then, of course, in the last 20, 30 years, it's gone wild. This is not going to last. And so gold to me means insurance. I'm not a gold bug. I'm not in love with gold. But right now, I think gold is the best asset to hold to protect against the risk I see. So it's only, and it has to be like you're doing, like we are doing. It has to be physical, has to be outside the banking system, has to be direct access by the clients so they can go and touch their gold or silver and see it. So that's what we have created, just like you have. And so that's the purpose of gold, not because we like the shiny yellow metal. Of course, we do understand history, which most people don't. And we do understand that it is the only money that has survived in history. People today think, especially young people, who are the cryptocurrency fans, they think that is different today, and now it's crypto and gold has no role. That sadly, you are not in over a few years going to change history, 5,000 years of history. So I think cryptos is not wealth preservation. It might be a means of payment, and it might be a speculative investment, but it's certainly not wealth preservation.
Okay. How about silver? We often talk about gold, but would silver still fill that same role as a wealth preservation tool, as a type of insurance?
Yes. When for quite a long time, so we started, said in 2002, and for quite a long time, we advised investors not to buy silver, or if they bought silver, just a smaller percentage, let's say maximum 20% of the total precious metals holding. And of course, we saw from the early 2000s, we saw silver going up to $21, and then down to under 10, and then up to $50, and then down to 13. So, the silver is not for widows and orphans because of the volatility. The way we look at it from a wealth preservation point of view, because we like you who understand gold and silver, we look at the gold-silver ratio, which is the gold price divided by the silver price, and that's now at around the all-time high, which means I think today silver is a very good investment, and I think silver. Obviously, I believe that silver will vastly outperform gold. that we will move. So the ratio is now around, let's say, 85, and we will move down to the 2011 level, at least, of 30 in the ratio. That means that silver will move almost 3 times as fast as gold. But I think investors have to consider that it is extremely volatile. So if you don't buy it at the right time, I mean, you can be hurt badly. Now I think it's a good time to buy. So our investors still have around, just under, a bit under, maybe 17% they have on average now for the company as a whole in silver, and the rest in gold. From our point of view, that's a sensible percentage. That of course you have also in Europe the fact that you have VAT on silver, not on gold, value-added tax. But of course, for our clients, we avoid that by buying it tax-free and storing it in bonded warehouses. So as long as you don't take it out and put it in your pocket, then you can buy silver tax-free. But therefore, it's not as practical in Europe to buy silver, because if you want to actually use it, you have to pay the VAT. So we treat silver just as an investment, not if people need small cash, then they should have gold, because there's no VAT on gold.
Okay, I see. The Swiss perspective, I'm not Swiss, and a lot of our viewers not Swiss either, but Switzerland has a long history of refining gold, being a great place to store gold. Can you share with us, who are looking from the outside in, the Swiss psyche towards gold, and does gold continue to appeal to the younger generation?
That's a good question, Patrick, because yes, gold has always been a tradition here, and especially when children were born, or when young people got married, etc. Gold was normally a gift from the family, etc. So, and that used to be the small Swiss gold coin, the Vreneli, spelt with a V, Vreneli. And it's not the same today. It's still there, but before, every single bank, everywhere you went into the bank in the high street, you would find gold in the window in all the banks. That's not the case anymore, and they've closed the gold windows in most of these banks. So there is a difference. Sadly, the Swiss have also now fallen in love with paper money. But I would say the tradition is stronger than in other countries, but it's nowhere in Europe certainly, and in the US, but it's not as strong as it has been. And now, talking about the refiners, well, gold is a very important strategic industry for Switzerland, because 70% of all the gold bars in the world are refined in Switzerland. The 3 biggest refiners are in the Italian part of Switzerland, Ticino or Ticino, and the historical reason for that was really to supply the Italian jewelry industry, because this changed somewhat now, but before, Italy was the major producer of gold jewelry, especially in northern Italy, and therefore the Italians are very good at producing artistic things like jewelry, not so good in high precision industry like making gold, and therefore the gold refineries were all set up and expanded in Switzerland. So now, as I said, it's 70% of the gold bars, and gold is 29% of Swiss export. Obviously, it's also a big part of the imports, because it's coming in and going out. But that shows you what an important industry it is. And therefore, as I see it, Switzerland both makes more gold than anybody else. It's a big part of the industry, and has a lot of private vaults here in Switzerland, plus a lot of bank gold, also gold stored by banks. So I can't see ever the Swiss government killing the goose that lays the golden egg. I can't see the Swiss government ever confiscating gold or hurting the gold industry, because it is Switzerland is a very major gold hub, and I think that will increase in coming years. Now, I know Singapore is also important, but Switzerland is, of course, today a lot bigger than Singapore.
Sure. Yeah, if I recall correctly, years ago, a few years back, there was, in the news, LBMA bars coming into Switzerland and kilogram bars heading out. Is it still that way?
Yes, that's there are it comes and goes in stages, but we see it very often. We see, for example, the UK. We've seen in the last many years the UK shipping 400-ounce bars, and obviously that is central bank gold. I mean, and then Switzerland refining them to kilobars because China and India want only kilobars. India wants also kilobars for the gold industry, for making gold jewelry. But I mean, that's been a very interesting movement. Of course, what has happened? Well, that we have these massive flows from west to east, and we've seen those in the last this century, let's say. We've seen the Silk Road countries, if you include, you take China and India and you include Russia and Turkey, etc. These countries have bought almost 30,000 tons of gold in the last 15 or the last 13 years. So that's a massive amount and a major part of annual production. And of course, there have also been other buyers of gold. So central banks, the 400-ounce bars come either from LBMA banks in London mainly, or from central banks, because the central bank gold, a lot of that is stored in London with the LBMA bank. So the way I see this is that central banks have leased gold to the bullion banks. In the past, when China wasn't a big buyer, that gold stayed in the London pool. But now, today, China is the biggest buyer, and India, of course, has always been a big buyer, but China is a very big buyer. And China then buys this gold, and now the central bank gold, which has been leased to a bullion bank in London, has now gone via Switzerland to China. And all the central bank now has is an IOU from a bullion bank in London, HSBC, JP Morgan, or one of these banks. And that gold will never come back, of course. And therefore, that IOU that the central banks have is worthless, because they will never get the gold back. So I think central banks have leased a big part of their gold, but I also believe that many of them have covertly sold their gold, secretly sold their gold, including especially the U.S. Of course, I, like many people, don't believe that the U.S. has 8,000 tons. The U.S. has not had an audit since Eisenhower's days in the 1950s. Almost no central bank in Europe has an official physical audit of their gold either. They have a paper audit, but no physical audit. So therefore, how can we trust that the gold is there? What have they got to hide? This is the people's gold. It doesn't belong to the private central bank. Belongs to the people. And why can't they tell the people if they actually have the gold they say they have? Well, in my view, because they haven't got it. So one day, Patrick, all of this will blow up. Together with, of course, the bullion banks have massive paper positions. So has the futures exchanges, COMEX, etc. And we will see one day a run on gold when there will be no offer, which means that no one will be the price. There will be no gold available, and no seller of gold can offer gold at any price. I mean, that will come. I mean, that's not sensational. That's just how market function. When there is growing demand, and it's going to be growing rapidly, I think, in the coming years, with the troubles I see in the banking industry and in the financial system, and that when there is no physical gold available, because all the gold that's produced today, we know that gold is being sold on every day. So when they have to settle all these paper gold, when the holders of paper gold ask for delivery, there won't be any gold. And this is when gold will go up dramatically. And that will come. We will experience that. And that's not a sensational statement. That will happen. Of course, all of these central banks will fight. And obviously they can't settle. They have to settle with money, but then they have to print the money, etc. So it'll be a mess at some point. So it's better to buy the gold when it's available, because at some point it won't be available except for at very, very high prices.
Yeah, I hear you. Just want to touch on one more local question for you before I get more into gold. How do the Swiss view cash, and what is the latest use of the $1,000 Swiss franc note? Is it still in circulation?
Oh, absolutely. There wasn't long ago when I went to the, to get cash out of the bank, and I got just, I wanted 1,000 francs, and I got 1,000 franc note, just one, which is a bit impractical. But if you take 1,000 franc note to a shop or whatever, it's no problem at all. They don't do like like they did with the 500 euro. No, they look at it and scrape it, etc. That's totally acceptable here. 1,000 franc note, absolutely, you can have that. And cash is still very much used in Switzerland. Of course, we do have credit cards now to a great extent, but Swiss like to carry cash. I always have cash, and I like paying in cash. I mean, that is until we use gold to pay. I mean, that is the most real money we have, cash, because otherwise, I know it's still paper money. Nevertheless, it feels better than just pushing a button and using electronic money. So yes, cash is still, a lot of Swiss like paying in cash today. And 1,000, you can take, there is no restriction on any, you can take out any amount of money out of the bank here. There's no legal restriction of taking, 1,000,000 Swiss franc out. Now, a lot of banks have internal restrictions, so they might say 100,000 or so in cash. But so Switzerland has still not done what all other countries in Europe have done, restricted how much cash. Their countries are down to 1,000 or 2,000 now, but in Switzerland that's not the case. It's still one from that point of view. It's got the least control of any country in Europe, certainly.
Okay. Last year, 2019, we saw some pretty significant movement in the gold price. It finally broke out of a multi-year resistance level, and it's generally risen pretty steadily up into 2020. What would you attribute to the reason for the rise in the gold price so far?
Patrick, as I said initially, we've been in gold in a major way since 2002. So I've seen quite a few swings in that time from the $300 we bought it at, and now we talk in dollars all the time, which is of course wrong, because people should always measure gold in their local currency. If you live in the UK, gold has been a fantastic protection. If you live in Sweden, it's been fantastic because the currencies have been weak. The dollar has been a little bit stronger, so gold hasn't gone up so much in dollar. But anyway, we measure in dollars. So coming back to your question, we've seen gold going from $300, up to then what we saw in 2011, 1900, and that wasn't a straight run either, because it peaked in 2008, and then it came off, and then gradually it went up to 1900. And we've seen now it going down to almost 1,000. So gold is not an investment. People who buy gold for wealth preservation purposes should only really measure it in grams or ounces and not in money, because to measure gold in fiat money is worthless. If you want to measure it and show how rich you're becoming in gold, you take the weakest currency then and say, in bolivars, in Venezuelan bolivars, whatever. So you can always eat it, but it's fallacy to measure real money in fiat money. Most of us don't have any other way of doing it. But in our investors who buy gold for wealth preservation, sure, they look at the price in their currency, but really, our investors, and I'm sure you have the same. First of all, every sell-off we've seen in gold, our investors haven't sold. And we don't have nervous investors who ring us when the price goes down. What's happening? So we are lucky to have the type of clients that we want to have, the people who believe in gold for wealth preservation. So this is a long answer to your question, why did gold go up? So what I'm saying is, I know that over time, and our investors understand that, gold is going to continue to reflect the destruction of paper money. And therefore, and I think that hasn't started yet. Of course, we know that. In this century, gold is the best performing asset of all assets. And of almost all currencies, Western currencies, have gone down around 80% against gold in this century. Some Swiss franc a bit less, etc. But overall, so gold has done extremely well, even in this century. And since 1971, all currencies have gone down 97 to 99% against gold. So what I'm saying is, gold is just, as we know, stable purchasing power. Gold doesn't go up, it's just the currencies that go down. And that will continue with fluctuations. But as I said, I think that trend has, the acceleration of that trend is going to start now. And therefore, the gold price, yes, went up last year. Well, we know that they say there was central bank demand, etc. Yeah, but when papers talked about central bank demand last year, and that had increased dramatically, but nobody really commented that the central bank demand was not Western banks. Virtually no Western central bank bought gold. It was the East. It was China. It was Russia. It was Turkey. Poland bought a bit. Hungary bought a bit. So, but it's not the Western countries. Mm. So yes, there was a bit of increase in demand, but in my view, gold is now incredibly undervalued and also unloved. I show this chart quite often in my articles, comparing gold to U.S. money supply. And if you do that, you will find that the gold price today, measured against U.S. money supply, is as cheap as it was in 1970 when gold was $35, and as cheap as 2000 when gold was $288. And today, at $1,500, gold is as cheap, as I said, as 71 and 2000 in relation to money supply. And of course, gold reflects the printing of money. So therefore, gold has in no way reflected the money printing that we've seen, the credit creation that we've seen so far. And as I said before, that is going to accelerate in coming years, in my view. So therefore, you're going to see a gold price which is going to be a lot higher than anyone can imagine. So what I'm saying is, I'm not worrying about day-to-day fluctuations. We're telling our clients, don't wait for a pullback. It's not worthwhile. Sure, you can get a pullback of $50 or $100. Of course you can. But the upside is thousands of dollars. And the downside is very limited. So that and you hold gold not for making money, but to protect your money and your wealth. So therefore, it doesn't matter when you buy it and at what price. But right now, gold is just, as I said, at the level when we bought in 2002. Gold today is unloved and undervalued. So today is an extremely good time to buy it.
Yeah. So I guess this kind of somewhat falls into, I believe, what you had said, that the gold price is not the gold price.
Yes. Well, the gold price is not the price of gold. That's what the gold price is not the price of gold. The gold price is the screen price, which is a price that doesn't reflect at all the intrinsic value of gold and the insurance value of gold. It's a manipulated price. It's a paper price, nothing to do with the physical market. It's ridiculous that the most important asset in the world, the most important money in the world, that the price is determined in a casino and in financial markets that are manipulated. But that's the way it is. that's the way it will be until this whole thing blows up, and so there'll be a run on the futures exchanges and on the banks on their paper gold. So that's going to come. So that's why we're not seeing the real price of gold here. We're just seeing a paper gold price that's traded every second of the day. At some point, we will see a more realistic price of gold, and that will be at totally different levels.
Okay, you touched on if gold were to be measured against the money supply, where do you think that price of gold would be?
Well, it will be certainly above 10,000, definitely. 10, 15,000 at least. It would be. And that's still not expensive in my view. Yeah. So the upside, and that's without hyperinflation or high inflation. If you get high inflation, you got to add a few noughts, but that's meaningless. I mean, we talk about purchasing power, but even from a purchasing power point of view, 15,000 or 15, 20,000, that's totally realistic in my view.
Okay.
So I'm sure we will see that. I'm not making forecasts. I'm not trying to be sensational because I don't really like to talk about the future gold price. I know people want to hear that, but I really want to stress the importance of gold from the point of view of wealth preservation. That's why we've been buying gold and our clients are buying gold for wealth preservation. I think the fact that you also are likely to see a major enhancement of your wealth if you buy gold, that's an added bonus. But I think that will happen too.
Okay, and you touched on paper gold. But why do you say that anyone who holds gold in a bank or ETF or some gold fund has not understood the purpose of physical gold, and how should gold actually be held?
Yes, well, if you hold, the whole investment industry today is all paper.
Yeah.
All you have is digital entries on a computer. And so the world has accepted that, and so we have hundreds of trillions of assets in paper form. Some of that has underlying assets. Much of it doesn't. If you take most of the ETFs today, if you take the ETF funds for stock funds, though most of those are just made out of derivatives. They don't even hold the underlying stocks. So you're talking about a very artificial system now. They said some people, if they buy a company, if they buy stock in the company, yes, they own a part of the company, but they own it in paper form. They can't go to the factory or to the industry in question and say, can I have my share in the company now? And I think we are dependent on a very dangerous financial system now, which in my view, what we saw in 2006 to 9 was just a rehearsal. They managed, and that was miraculously, I would say, to in 2008. But I think that was just temporary. I'm surprised that they managed to do it for a period of 10 years. Because we saw the bottom in 2009, and now we are in 2020, so it's over 10 years. But nevertheless, global debt has doubled since 2006. When debt doubles, it means that risk goes up exponentially. So the risk situation now is much, much more serious than it was 2006 to 9. On top of that, you have derivatives that the BIS, the Bank of International Settlement in Basel, doesn't report properly. They say it's 600 trillion. I think it's at least still the old figure that was reported before of 1.5 quadrillion. And that is absolutely, that is a nuclear bomb in my view. Because derivatives has been an incredible money spinner for the banks, and they have sold whatever they could out of these. derivatives work when there is there are buyers in the market of derivatives. They are in constant demand, and therefore that's been a market that has been easy to make money in. When financial markets turn and people want to get rid of the derivatives, there will be no liquidity. And this is why, I've been saying in articles that 1.5 quadrillion, you can add that to global debt of 260 trillion, and add then unfunded liabilities and to that, then you get over 2 quadrillion. And that is the potential amount of money that central banks will have to print in coming years. I hope it won't happen, but I think the risk is there. And this is why, coming back to your question, I only look at risk. I'm making these. I'm looking. I'm not making forecasts. I'm just saying that this could happen, and therefore you don't want to have your principal assets within the financial system that is extremely fragile. And as I said, at best it survives with a lot of money printing, but then the money you have in there is not going to be worth a lot, because the money will be debased totally, and there'll be bail-ins also. So therefore, I'm saying that for a part of your wealth, you got to insure it in a different way. And we, like yourselves, have come to the conclusion that gold and silver is the best way of insuring your wealth. But because you're worried about financial system that is going to crash, then you obviously mustn't keep your metals in paper form. You mustn't keep your metals in the financial system. So that's why an ETF is also paper form, because it's within the system. A lot of ETFs don't have the gold or the silver. When the ETF demand of gold went up last year, the Swiss refiners saw no increase, no buying from the ETFs. So that gold was just lent from the bullion banks using central bank gold. That probably lent out the same gold 2-3 times. So I don't trust the ETFs, even if they say they have gold, physical gold, and I don't think anyway you should have it in the financial system. So therefore, then companies like yourself and ourselves, we are providing a service to investors, which is so they can hold gold and silver outside the financial system in the form that they can touch it, they can come and see it, it's theirs, they have instant liquidity as long as there is another form to sell it into, i.e., into paper money. If the paper money disappears and the system breaks down for a while, then of course you will have there'll be barter, and we will provide some barter exchange for clients. I'm sure that's going to happen also. I'm sure you will do that too, because remember that in every crisis in history, going back thousands of years, gold has always been money, and people have always relied on gold to save them. And that's going to happen again, in my view. And since we have a financial system now that is, blown up more than it's ever been in history, and it's not just in one country, it's worldwide. Before you had a crisis in one country. Now you have the same problems in all of Europe. US is also a basket case. Japan should have sunk. The Japanese economy should have sunk into the Pacific a long time ago. With their financial problems, and China is also a big bubble. So it's everywhere. So there's nowhere to go now. There's no one who can save the system if it breaks down in one area, because it's got to just go like a wildfire across the world this time. So this is why the situation now is so much more dangerous than it's ever been in history, and that is why, as I said, wealth preservation is so important.
Egon, can you share with us more about Gold Switzerland, which is the precious metals division of Matterhorn Asset Management?
Yes. So we are an asset manager, but then and we started with gold, as I said, beginning of the century. But then now we are actually now doing only exclusively gold. We decided to specialize only. So now Gold Switzerland is really just our URL, So that's our, if you want, a marketing name that we use on the internet. The company is called Matterhorn Asset Management, but Gold Switzerland is how people find us on the web, goldswitzerland.com. So yes, what we are doing is very simple. Just like you, we are talking to people and helping people. As I said, and our average is quite high. Investors that we have are high. Our minimum is $250,000 or Swiss francs. Our average investor is a lot higher than that. So we have investors from all over the world, 60 countries, and as I said, our primary vaults are in Switzerland, in Zurich, and in the Swiss Alps, which is, as I said, the biggest gold vault in the world. But some of our customers also store in Singapore. We are a high service company. We hold people's hand and help them with opening account, discuss with them the reasons why they should have gold and how. But I mean, when they come to us, they are converted already. So we don't have to convince them, but we still talk about strategy with them, etc. So we give a very, very high level of personal service because our clients deserve that. We buy mainly 100-gram bars. For the simple reason that is the smallest bar you can buy without paying a high premium. If you buy a coin, you pay quite a high premium, but for a 100-gram bar, we get at a very good price. And we don't actually earn any money on the gold itself. We charge an annual fee, so we don't earn any money on the gold. So the client can buy it from us very cheaply. And because we think if we ever need the money for liquidity, it's no use having a kilo bar that today is worth $50,000 and tomorrow might be worth $500,000. You need smaller denomination, and that's why we take the 100-gram bar, which is it's only this size. It's very, very small, but that's a convenient bar. In silver, on the other hand, because it's VAT here, you can't use it as money here. We actually buy the big 30-kilo bars.
Egon, what is the best way for our viewers to follow your work? Is it going to that website, or are you on Twitter?
Well, I'm on Twitter, but I'm not active on Twitter, or we are not active. When we publish articles or publish anything or interviews, whatever, that's on Twitter. But our website, goldswitzerland.com, this is where they'll find all my articles, all the interviews, etc., and a lot of information about gold, etc.
Yeah, well, we're lucky to have spent some time with you, and we really do appreciate it, and we do hope that you have a good year ahead.
Patrick, a pleasure to speak to you. Thanks very much.
That was Egon von Greyerz from Matterhorn Asset Management sharing his views on the precious metals market and the global economy. To find out more about Egon's work, please visit his website, goldswitzerland.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content, and do also check out our SBTV podcast on iTunes and Spotify.